Thank you so much for watching Morning Live. Now, it's been reported that Old Mutual has lost up to 10 billion rand in market share since its legal battle with ex-CEO Peter Moyo began in May this year. Now, the Public Investment Corporation, the PIC, which invests government employees' pensions, is one of Old Mutual's biggest shareholders, and it has now urged the insurance giant to settle its differences with Moyo. And joining us now is Khaya Sithole, a chartered accountant and political commentator, to talk to us about how this legal spat affects the ordinary citizen who invests with Old Mutual. Khaya, thanks so much for coming through. Now, let's start with the money issue. Since May this year, Old Mutual's share price dropped by 7.3%. Just looking at that, what does that tell us about the company Old Mutual and how this particular story has played out?
Yeah, it's a difficult one because Peter Moyo could still be employed. This spat could have not existed and Old Mutual could have still lost 7%. Now remember, how share prices move on the market is a combination of multiple factors. There could be perhaps the latest results being put out to the market, and it disappoints investors who say, well, we thought you were going to generate a profit of X, you haven't done so, so therefore we're going to look elsewhere. So the movement in the share price itself cannot be fully attributed to the sacking or the attempted sacking of Peter Moyo. But of course, what you also know is that when instances of this nature do happen, when there's an executive fallout or when there's an executive departure, and a lot of people have invested in the business on the understanding that this man came in, he said he's a strategy, we believe in that strategy, so therefore that's why we're investing in it. When that person then exits, there might be some shareholders who then say, well, actually, the basis for me putting my money here is no longer there, so therefore let me withdraw my funds. But it is absolutely impossible to actually pin the entire impact or to assess or even, try to quantify the impact of the fallout itself and then separate that from the general market trends or the general market movements, because every single day and every single hour the share price moves, so we'll actually never know what the full impact of this was.
But is it much of a coincidence then that this particular loss in the share value coincides with this period of turmoil and attrition between the CEO? Is he still the CEO?
It depends on who you talk to.
Who is he?
Yeah, so there's definitely obviously very strong correlations with the turmoil that's happening at the executive level and also the decline in the share price. But the issue here is, can we then attribute a particular number to say that the first 1 billion or the first 5 billion is due to the Moyo saga and the rest is due to, the general market movements? That is an impossible exercise. So I do think that perhaps if Old Mutual hadn't engaged in such a process with its CEO that seems to be taking forever to resolve, maybe the market movements wouldn't have been as unfavorable as they are right now. The best way to assess that is to say, well, what happens if they restore him today? Will the people that withdrew their investments or the people that sort of lost confidence in that particular investments, will they then return overnight? And the answer is no, because I think for me, every single investor would know that the problem cannot be one individual. The problem is of the collective board of directors of which he was a member, which has allowed itself, in spite of the fiduciary duties that it has allowed itself to preside over a crisis that is quite simply self-manufactured. The crisis starts from the moment where they think that they can employ someone who owns a company that obviously has an interest or has a conflicting interest with Old Mutual, and then for them to assume that these things will organically resolve themselves. That's where the problem started, and we must always ask the question of what the board of directors of Old Mutual actually thought was going to happen should the conflicts arise. That remains an unresolved question. They simply say, we thought he was the type of person who would do the best for the company. He was the type of person who was always going to champion the interests of Old Mutual rather than the interests of NMT. That means that entire board is remarkably naive. And I think one of the most disturbing things that I saw in their latest defense against the contempt of court application, one of their big statements is that, oh, please be aware that in our entire board we don't have a single person who's a legal professional. And then I took a step back and say, well, you just engaged in perhaps the most complicated business untangling process with the separation of businesses. That is why they hired Mr. Moyo. And I'm thinking that particular process has massive legal implications. And for you to say in a board of 15 directors we couldn't find a seat for someone who's actually a legal specialist to just at least guide us through the normal business processes, you can then understand how they ended up with this particular fiasco where nobody seems to understand what the type of contract that was signed says and what the consequences are of the dispute that is now arising.
So what does all of this mean for the ordinary consumer who has their money, their pension invested in Old Mutual?
I think we need to distinguish between two types of stakeholders. There are the stakeholders who actually put their money every single month in Old Mutual, saying, please be the custodians of my money. When I retire, I need to get something out. So those particular stakeholders are probably aren't as affected, because for them, obviously, Old Mutual is holding that money in a fiduciary capacity. They've had to invest it in particular instruments and ensure that it generates a particular return. So that's the one part of stakeholder. The other stakeholder are the ones that have invested in Old Mutual itself, the business, which is to say, look, we are going to buy shares in your company because we believe your business of, being custodians of other people's money is going to generate the type of returns that we're looking for. So those are the ones that are probably more worried now about what's happening here, because they're the ones that have said, we're investing in this business. This business has got these particular individuals whom we think know what it is that needs to be done in order to get the business going. So when those individuals now come out and indicate that they actually might not be perfectly clued up about what their fiduciary duties are, about how to manage, the public affairs of the institution, then you should be worried as an investor in the business. But I think as the people who actually have just given their money to Old Mutual, you probably haven't reached a crisis point yet. A crisis point for them comes when there's an operational failure. So for example, you thought your money was being invested wisely, and then it turns out that maybe there's an IT failure where things for a day or two do not work out the way they should. So that's when those particular stakeholders will be particularly concerned. But I think in this one, it's the shareholders rather than the people who put their money in their capacity as customers of Old Mutual, who have much greater cause to be fearful.
So let's speak of some of those people, government employees whose pension funds are invested in Old Mutual through the PIC. Yeah. Should they be concerned?
Well, I think anyone who is actually invested through the PIC should be worried. Never mind whether Old Mutual exists or not, because the PIC itself is in shambles. It is an institution in crisis mode. Now, the big issue here is that you must always remember that when the PIC invests and is an institutional shareholder, it invests large chunks of money. It doesn't invest in 0.5%. It goes for 10, 12%. So it's a massive and a very influential stakeholder. So the big thing about the PIC is that it's always given us the impression that the reason we want to be a big and influential stakeholder is that we need to be taken seriously by these companies. If we pick up a phone call and say, oh, by the way, that person you've just added as a director, we have a problem. Or by the way, the CEO, the way he's conducting himself, we have a problem. So the PIC has got massive clout here. So the key problem here is that the PIC will then look at this entity and say, look, we've taken pensioners' money, we've put it in this company, and this company is underperforming. Of course, we've got a reason to be concerned. Now, the strange thing, of course, is that the way finances work is that you could see this crisis now, but by the time that the PIC has to get a dividend from Old Mutual, for example, which is twice a year in the middle and at the end of the year, all of these things could have been corrected, and then you might find that the actual cash flow that the PIC extracts from Old Mutual is exactly the same as it would have been, because the markets move up and down. So if it turns out tomorrow that there's some favorable news on the market relating to Old Mutual and the share price bounces by 10%, suddenly you're in a better position than you were yesterday. And it really then becomes a question of timing. Will, at the time that the PIC has to get its particular economic returns from Old Mutual, will the circumstances that are currently bedeviling Old Mutual have resolved themselves? And if they haven't, then the PIC has got a legitimate cause to say, look, last year you gave us a dividend of 10 Rand, you engaged into this really bad legal saga with your CEO, and today you've just given us a dividend of 8 Rand. Do you not think that perhaps had you not engaged in that process, our dividend would have remained the same or would have been higher? So those are the type of conversations you have across the table, and then people have to then defend themselves and say, well, actually, the market, look at our competitors and look at everybody else. Everybody paid a lower dividend, so therefore we're not unique. But if everybody else indicated that they did much better, then of course it's difficult to then say, oh, no, we're innocent bystanders. The PIC would have to say, this is actually a self-manufactured crisis.
So just honing in on that crisis at Old Mutual. Yep. So it's just been crazy. So you had Peter Moyo, the CEO, and as you said, the board needs to answer some serious questions about employing him in the first place, given what they knew about his business relationships anyway. Yeah. So then the question then, he's hired, he's fired, the court overturns it, he goes back, he's locked out, go back to court, he's hired again, he's fired again, and this is literally how it played out.
So like you're reciting a script to a movie.
Exactly. So at this point, we don't know exactly what the position is, but were Old Mutual to settle with Peter Moyo, and a figure of 250 million Rand is being bandied about, what would that mean for them?
It will mean that all the board of directors deserve to be fired. You cannot possibly engage in a process of this nature that ends up costing you R250 million being paid to one individual and still think that your position is tenable. Because then the stakeholders, whether they're the investors or even the customers themselves, have to ask themselves the question, well, the key issue here, remember, is that this board is not coming through and saying, actually, we made a mistake in drafting the contract, we made a mistake in doing these things. They still insist that they're correct. So imagine the scenario where the court says, well, actually, you're incorrect, you have to pay 250 million rand. Would you then keep the same people who still insist that they did nothing wrong and then say to them, go and find us the next CEO? Because then the question will be, well, clearly they didn't know how to draft and manage the contract of this particular CEO. Would you then put them in the position to draft the contract of a new CEO when they still insist that they did nothing wrong? Because when a person says they did nothing wrong, then it means that in their processes of onboarding the new CEO and managing him, nothing is going to change. So how do we then know that you're not going to end up with another 250 million rand later on? So if that turns out to be the case, that Mr. Moyo does win the 250 million rand lawsuit, it is quite inconceivable that the board of directors can remain, because they have said that we've done nothing wrong. If nothing wrong ends up costing people R250 million, well, actually go and do that nothing wrong in your own businesses, not in this one.
And they've said they've done nothing wrong, and then they've gone even further to say that they will not vacate those positions because they are clear that they are not in the wrong in this instance. But there are, of course, talks about them being in contempt of court. So if they are found guilty on that also, you know, again, where does it leave Old Mutual? Where does it leave them as a board of directors?
It's a very important corporate governance question, because, again, you know, when you hear directors saying that, no, we're not vacating our seats, it gives the impression that directors wake up every morning and decide that they're going to be the director of a company. That is not how it happens. What happens is that shareholders are supposed to identify individuals whom they think are going to be good custodians of the business, and then you end up with a big meeting called an AGM, and at the AGM, the shareholders say, yes, we'll take you, no, we won't take you. That is how the classic definition of this thing is supposed to work. But in South Africa, of course, that's not how it works, because what happens in South Africa is that within that team of directors, you call up your best friend that you know that you've served on a particular board with, and then you say, guys, I'd like to recommend this person. The board says, yes, we like this person, we seem to believe that we can work well together, and then thereafter what the shareholders do is that they engage in a process of ratification. So they get to the shareholders meeting, which is the AGM, and then they get told, resolution number 1, Mr. A should be appointed as chairman. So unless the shareholders arrive at that meeting with cogent reasons why they don't want that person, it literally becomes a ratification exercise, which is why then you hear directors giving the impression that they're actually just, you know, permanently installed in those positions. There is no such thing. If the shareholders of Old Mutual wanted to get rid of any director today, they've got full rights to do so. They'll simply have to say, we appointed you at this particular AGM, this was the voting that elevated you, we've decided to withdraw that endorsement, so therefore you no longer represent our interests, so you're no longer a director. But unfortunately, South African directors have become remarkably arrogant, because they know this shareholder apathy, where the shareholders simply aren't engaging in the process, means that they're installed until at least the next AGM.
Well, thank you so much for your time this morning. Khaya Sithole, who is, of course, a chartered accountant and political commentator. And that brings us up to 7 o'clock.